Good day, everyone. I hope everyone is having a wonderful Sunday. And today we're going to discuss some altcoins we can buy during this massive crash. But more importantly, we can discuss some tips and tricks. What should you do when there's such a liquidity crash? And what should you avoid doing? And why should you pick certain coins rather than other coins? And that's what the topic is for today. I think it's going to be a video of around 15 minutes. Also, if you like the content, please subscribe to the channel or follow me on Instagram. Also check out my website if you want to trade alongside me. And before I start, yes, I was underwater heavily as well. And made some decisions to adjust a few positions, DCA'd a little bit, started a new position, and one of them was sushi, just because of some gambling. It was just too heavy down, saw some divergence, saw some volume accumulation as well, so I decided to punt along, which is in profit. And the other one is that I took along on DIA at 209, which is currently also heavily in profit, which is great. But being underwater is not bad. It's what you will be experiencing a lot in your trading career, and you can't predict the exact bottom. So if you have bought and you're underwater and you expect it to bounce back relatively soon given the significance of the drop, there's no point in over trading or closing it when everything is so overextended downwards, which is exactly the opposite of what you should avoid doing when everything goes up. If something is exploding, you should always avoid buying heavy green candles. And I tried to say that with the charts of Link and Bond and Omise Go a few in the past weeks actually, or even Swipe. If something runs heavily, it will always come back down to levels to test for support, and these are the triggers you can start taking the long. So for instance, in the run-up of Chainlink, and if you decided to buy at 17 or you avoid buying and you see a clear support level at $14, it decreases the amount of potential loss heavily. And also, given that there is a significant support level at $14, or just as an example, you can put in a stop loss fairly easier, or an invalidation area fairly easier than when you buy when it's something up when something is moving up heavily. So that's the first step to avoid large swings in your portfolio. What you try to do is that your portfolio goes up in a sort of consistent way, and that the swings in the volatility of the portfolio starts to drain down. So when everything is exploding, your emotions should tell you, to start buying, which you don't. When everything is crashing, your emotions tell you to start selling, which you shouldn't. So try to reverse that way of thinking through a few simple steps, and we have discussed one already, and that should define a better strategy for you to become a trader or an investor. If you're an investor and this dip down happens, probably you are quite happy with the drops on some of the coins that are relatively new, which is giving you a new opportunity. If you are already in longs on, for example, Ether or Bitcoin, and you have an horizon for multiple years, then probably you don't even care about this drop. Why? The loss you see is just temporary, but your mind can't make that up. It expects further downwards momentum, which means that you will endure more pain. And I know, if you lose money, or it looks like you lose money, it's painful. It's causing that pain in your body. But it's never a loss until you liquidate it. So if you're in a position and it's down 25%, but it's so far overextended down, and you're out of liquidity, and you expect the markets to reverse relatively soon for at least a relief rally, that's the point you can start thinking, okay, let's get away. Just keep this one in, and don't do stupid shit that can only blow my account, which is do not use leverage. Especially, I'm avoiding leverage in crypto trading in general, only using like 3x max, and only doing it with just a small portion of my stack, which is maximum like 2 or 3%, as it's crypto itself is heavily volatile, and if you decide to use leverage, your positions can get liquidated relatively fast, especially in this volatility. And that comes along with the fact that if you use the futures platform and you don't use stop losses, which is also a common feature, you get liquidated or you lose a lot of money, and then you want to revenge trade because you want to be back to the level that you were a few days. Never, never, never do that. Don't overcomplicate trading. If you feel these emotions and you don't have the balance and peace in mind to make a strategy, don't add on leverage. Don't add on in general in the markets. Just step down for a little bit, calm down for 1 or 2 hours, and then start to define a new plan. So one of these things is that, okay, I've bought too early. I still kept a little bit liquidity left, which makes me eager to buy the dip even more. If we break back up again, I can define the levels quite easily, and from there I can start trading a little bit more, through which I'll be back in profits relatively easy. So we'll discuss that a little bit about the other coins as well. But don't start to revenge trade. Don't use leverage in general. The house always wins. Then you've lost money. What's next? Well, stop checking the charts every 5 minutes. If you still have positions, checking those charts every 5 minutes doesn't make sense. Your emotions will kick in, and it's only killing your mental health, which is also the case if you are checking Blockfolio or Delta every 5 minutes. Everything goes up. Then you're probably investing with too much money, and you are not emotionally balanced when you're trading or investing. So you should always have a plan if you're trading, but the people that are checking the charts every 5 minutes on Blockfolio or Delta usually don't have any plan at all. So then next, use liquidity to start DCAing, dollar cost averaging, if you're already into positions, through which you can adapt and sell these portions when coins bounce back up. That's the essence of having liquidity left is so incredibly important that I'll try to make an example. And it's a very simplistic and extreme example, but I hope it opens some eyes for you, or at least that you start to think, okay, I want to become financially independent and financial freedom, but to do that you have to understand a few things. The first step is to, if you have $1,000, $100, 100k, it doesn't make sense with how many dollars you trade. It makes sense how you use it, how you define your trades, how you use your money, how you define your strategy. And one of these things is that if you have a trade of a stack of $1,000 and you have trades for $800, always keep these $200 left to buy the dip in this huge volatility, through which you can use that to get back in profits relatively easy, and then the pain is just away. And that's why I decided to make this example. Let's say you have 10k in trading stack and one BTC is worth 10k. The general common sense what people do when they are trading is that they decide to buy one BTC of 10k. So they decide to go all in and buy one BTC there, as they expect it to go to 12 or 14k. They expect the 12k to be next. However, Bitcoin drops to 5k and you don't have any money left to DCA, so your balance is down 50%. You'd only have 5k, and it will only be back in profits when BTC hits 10k. But then you've got the other option, which is, okay, you have got a 10k trading stack and you understand some stuff about risk management and portfolio management, and you decide to buy 50% of your portfolio into Bitcoin at 10k, and you want to just use DCA. The other 5k you remain in your portfolio, which is just money you can use as liquidity. BTC drops to 5k and your balance has dropped with $2,500 as this 5k portion got squeezed and you are down 50% on it, right? So you're down to 7.5k and you decide to use the other 50% to buy at 5k, through which your average entry is 7.5k and your trade will be in profit once BTC hits 7.5k. So the difference between these two is that having liquidity decreases your average buy-in and increases the probability that you're back in profits on any bounce that comes along. So it's a very simplistic and extreme example, but this shows the essence of having liquidity, as you can regain fast in these volatile markets. And you should be aware that markets can stay crazy as even longer than you can stay solvent. So you might see a bottom figure on a certain coin, but it can still drop down 30%. I've even experienced it with Curve. I thought there was a bottom and it dropped even further down the road, so I used a little bit to DCA. Was already in too much. Personal issue I did there. But I had liquidity through which I can DCA and decrease my average size or average buy-in. So that's very important to do. Then finally, what are my positions? I've decided to switch to coins that with a significant amount of hype surrounding it, and also strong fundamental projects which will bounce back the fastest. Well, the first three are the strongest ones, which is Swipe, Dia and Curve. ONT, I really enjoyed it. TA in general on the BTC pair. USDT pair got crushed because of BTC, obviously, but I think it will be one of the biggest winners. And Tesos is just too overextended downwards and has some hype surrounding it as well. So I decided to add this one. And last night I opened a position on Sushi. I didn't even see whatever was going on with the project, so that's why I got confused with some of the hate replies. I was just chilling on the beach with a grill and just watching some TV afterwards, and then I decided to open a position just purely TA, which now pumped up 2x or something, and I closed it partially already. So the main positions are these 5, and I think we can check out what there's into these coins. Well, what we see is I've posted this example on Twitter earlier on, in which you can see that there's a heavy downwards momentum, in which every previous support level gets rejected and confirmed for resistance, and there's a clear downwards trend, after which you can see that there is a bullish divergence applied on the lower time frames, through which the crucial point is that it regains the previous support level. In this case, BNB did, and what you most likely expect is that the previous resistance confirmation gets broken, and then we start to run towards the next resistance level. And there's two options. One is that we reject mid-range around $21, or the other one is that we clearly push through and then take the liquidity above the range high. And in this case, we've moved 24%. Also, given the fundamental point with Bella or something that's coming up. My personal opinion about CZ, I'm not going to share that here. But I've raised some questions on Twitter regarding their ethics, and I think more people should do that. So that's the 2 points. If we get towards 2080 and get down, this is a TP, so you can use the money to start buying back in on the lower levels. If we get this high with BNB, the majority of my trade would be out, as then I will be looking at longs at the support resistance flip, and then we might start rallying towards $24. If we do lose the support level, obviously this higher low and support resistance flip is the one that you want to get. So then we can transfer this towards the coins we have been discussing, and I'll discuss 3 of them. Swipe is the first one, which you can see is deploying the exact same strategy, right? So what you can see overall in the markets, a bullish divergence, as we have here, reclaim of support, and then broke through the resistance level, and the crucial one is the one we have just broken through, and that's this area here. So what we see is that we've discussed mid-range, right? Now we've got mid-range with SXP, and now you clearly want to see that the area from previously, so this zone around 173 to 180, becomes support. If that happens, we can confirm that we've got a breaker of this downward trend. So you want to get, we have got a movement, you want to get some sideways construction, compression, and then the next rally should most likely bring us above the range high of this resistance zone at 214, and then I'm going to target the area around 227. So that's the strategy right now. If you are in this one and you want to micro trade this one, obviously you should already have taken some profits, but then you're looking for the levels here. If we do lose 172, it seems very likely that we're going to take the lows one more time, and then I'll be deploying longs anywhere in this range. So if we get here, obviously the next portion should be that we are holding and flipping the previous support level for support again, and then you can start taking these longs and these trades until we clearly hit a range high. So for instance, this is an ideal example in which heavy crash down, reclaim, rally up, all the way down, support confirmation, another rally, and even then we got even further down the road. So if you want to trade this one and we get in this area, that's a clear support TP. You can just use partially TPs through which you are able to buy in the dips again, after which a new wave starts, or you can just hedge yourself with some slight shorts. DIA, I've not been checking this one too much. A little different figure, but also we've got the bullish divergence, double bottom structure, sideways range, breaker. Now you don't want to see the price of DIA drop below the support level, so you want to see support sustain at 225 to 220. If that holds and gets the exact same figure of SXP, we can expect a rally to occur towards this range high, and then we can start seeing some significant movements. So for instance, if we do hold here, it seems very likely that we get into this range and then back down towards the overall support area around 263. So this flip, continuation, support resistance flip, that's the play you want to make. As in this case, if we bounce back up and you have bought somewhere here, you're back in break even, you can take partial profits, take this super higher low, or take the another entry here, and that bounce up and you're back in profits already, while the price is severely down from the area we used to be in. Final one, essentially the same, which is curve. Bullish divergence, multiple ones as you can see. Flip the level, now some more consolidation, might be dropping down towards 180 some more. If we do consolidate, it seems very likely that we're going to take the liquidity above $3, and then I'll be looking at TPs at 330 to 350, and then we essentially do the exact same thing as any coin can do. But you can see that these coins have around 50% upwards momentum to gain. So definitely, if you are in a loss, that's temporary. Start trading actively a little bit more, start deploying a strategy, use this video as a slight tips and tricks video, and evaluate your own trading. Thanks for watching, and I'll be back tomorrow with some new videos, some new content, and I wish you a wonderful Sunday.